So we've got Jade Burford from Advocate Private Wealth. Advocate Private Wealth, their mission is to assist people to be healthier, wealthier, and wiser. They believe that being organized in relation to your money, you live happier and healthier lives. Jade, you can take it away.
Thanks, Bruno. Good evening, everyone. So, as Bruno mentioned, Jade Burford. I'm the Principal of Risk Management at Advocate Private Wealth. It's a fancy title. But really, what I would like to do this evening is just to share a bit of my story with you as to how I got to being the Principal of Risk Management at Advocate Private Wealth, what that means, and really why it is that I'm passionate about what I do. So about 10 years ago, I moved from South Africa, Johannesburg, South Africa, to Perth after a few horrible things happened over in South Africa. And I moved over fresh out of high school to study over here in Australia with no intention to ever stay permanently. And I went to the University of Notre Dame in Fremantle, and I studied a Bachelor of Biomedical Science and undergraduate pre-medicine. And I came to the end of my degree, and unfortunately, the postgraduate part of my degree wasn't open to international students at the time, which wasn't explained to me when I first started the degree, so that you can imagine my disappointment. But then at that point in time, I had met my now husband, and so it was at that point that I either had to return back to South Africa or I had to start working. I started working as a microbiologist pathologist at the Royal Perth Hospital in the city, and did that for a few years. And whilst that's a lovely job and all, it wasn't for me. I'm not a lab person. I studied medicine because I wanted to make a difference in people's lives. My intention was to do Doctors Without Borders. So at that point in time, I looked back at my degrees and thought, well, what can I do with what I've got and, really start to make a difference in people's lives? And I have a minor in data analysis and statistics and a major in finance. And so after having a look at all of that, I was actually approached by somebody from a reinsurer. I don't know if too many people know what a reinsurer is, but it's basically the insurance company that insures the insurance company. So I started working with them, looking with the actuary department and division, at looking at genetic predisposition. So what is somebody's genetic predisposition or genetic makeup? And based on that genetic makeup or disposition, what's the likelihood that somebody needs to make a claim on certain medical events that sit within insurance policies? So every insurance policy is underpinned by medical definitions. And it's those medical definitions that ultimately determine whether we can make a claim. Okay, so you can understand that if somebody doesn't understand the medical definitions that sit within those policies, it's really quite confronting come claim time when the claim isn't paid. So during that process, I sort of realized two things. And the first thing it's a broad blanket statement, so I hope nobody gets offended. But Australians don't understand the importance of insurance. And that's okay. That's a good thing. We live in a little bit of a bubble, and I like the bubble. It's why I'm here. So coming from South Africa, since you're sort of this big, it's drilled into you the importance of insurance. And so I grew up, and that's probably the nature of South Africa, which is unfortunate. But I grew up with that fundamental belief that you don't leave the front door without insurance. And then coming over here and realizing that was a little bit confronting for me. But the second thing that I realized, and it's the thing that made me really angry, and I guess still makes me really angry today, is the people who do understand the importance of insurance, neither them nor the advisors placing the product for them, understand those medical definitions that sit within those policies. And it's why you have this today, tonight. I thought I was covered, but I'm not. There's a hugely horrible stigma that's attached to the life insurance industry in Australia. And really, I can't blame you. Because there is a bad stigma, and that's because there's a lack of knowledge or lack of understanding. And so my passion and what I seek to do for all of our clients at Advocate Private Wealth, and for all of the clients that, I get through Sondergaard and other referral partners, is to make sure that the policies that you're taking out in the market and that you have are actually aligned to who you are, aligned to your genetic predisposition, aligned to your medical history, and that our clients are educated and empowered in understanding what those medical definitions mean and what it is that you need to meet come claim time. So that's a little bit about me. Advocate Private Wealth has been in the market for 6 years. We're a private wealth firm out in the city. And I sit looking after all of the clients from a risk management perspective in the company. When I mentioned a few times that there's this horrible stigma that's attached to the insurance market in Australia, one of those reasons is because of the lack of knowledge in terms of what the medical definitions mean. Another one is because in Australia, we have a lot of diversity around the types of medical definitions that sit in policies. And that's a good thing, if obviously you understand it. So there's definitions in the market, like if you take cancer, for example, there are some definitions in the market that say you almost need to be dead before you can make a claim on a breast cancer. But then there are other medical definitions in the market that pay on diagnosis of a listed medical condition like a cancer that has a Clark level 3 or above, or a 1.5 millimeter breast lobe thickness and above, and that's the staging and the size of the tumor. There's policies in the market that will only pay out if somebody has a triple bypass surgery or goes into full cardiac arrest. But then there's other policies in the market that will pay out if somebody has what we call a silent heart attack, which is just basically a little bit of chest pain, a troponin level rise, or an ECG change. Why I'm getting technical and outlining all of this to you is that as a society, we're becoming more educated. And as a society, the insurance industry is changing because of how educated we as a nation are becoming. So as medical advancements, continue to grow, and as the medical profession continues to advance, we are becoming more educated around what signs to look out for. There's early detection. All of those things that were never available, that knowledge that was never available to us before, that we can now use quickly Google. I've got a bit of chest pain, whereas somebody in the past might have thought that was indigestion and done nothing about it. People are actually being more proactive with their health. So as those changes occur, and as we become more educated, we need to make sure that the policies that we hold are moving with that, with those changes, so that we're not required to have that triple bypass or go into full cardiac arrest anymore, and that we are getting paid out for being proactive with our health, and that we are getting paid out on insurance for actually, going and getting that chest pain checked out sooner rather than later. And so that's really what I wanted to touch on today. And the other thing that I wanted to touch on just briefly is, in a lot of corporate and retail and industry funds, there's a lot of default cover. And what I mean by that is there's a lot of super funds that exist that have insurance inside of them, and you may have them today. A lot of you may have them. It's not uncommon. And there's insurance that sits within these funds that you never actually applied for. It's just there. And you might look at your super fund and you'll see I've got some life and total and permanent disablement cover or some salary continuance cover, and you're paying a premium for it, but you never actually applied for that cover. So the question that I ask you is, how can I, as an insurance company, which I'm not, but if I was, agree to pay you, call it $500,000, if you die or if you're totally and permanently disabled, when I don't know anything about you? So I don't know, how much you drink. I don't know if you take drugs. I don't know if you jump out of a plane for a living. I don't know if you've got cancer, ever had cancer, or if you have a strong genetic predisposition for cancer. So the answer is I can't. Okay, so that coverage that I'm speaking about causes a massive misconception that people are covered when they're not, because what that cover is really just an indication of coverage. Okay, it's not actually coverage. It says we may pay you out up to $500,000 if you die or are totally and permanently disabled as a result of the circumstances that you're faced with. But you need to meet all of these terms and conditions. And it's at that point that the insurer will come back and underwrite you. And when I say underwrite you, I mean it's at that point that the insurer will come back and ask you, what's your family medical history? What's your medical history? Let's have a look at your medical history. What do you do for fun? What do you do in your spare time? What do you do as an occupation? Do you smoke? Do you drink? And that's when they get to know you pretty well. And it's at that point in time that they'll determine whether you meet a claim or not. There's so much uncertainty in that. And that, for me, is not the purpose of insurance. If you're going through a death, a total and permanent disablement, a trauma event, or you need to make a claim on income protection, it's possibly one of the worst times in your life. the last thing that you want to be doing is fighting with an insurance company to try and get your money. Okay, so all that I seek to do, really, because that's what it looks like, insurance, it's the good fortune of the many paying for the poor fortune of the few, and it's quite complicated, and we can get inundated in the detail. And so sometimes, or more often than not, our clients feel like that. That's the insurance company. They're walking around, and we're all these little people all over the place, and we're getting trodden on. And what we seek to do as a firm, or what I seek to do as a risk management specialist, is that. It's to hold these people to account and these insurance companies to account and to create alignment between you as an individual, the kind of policies that we take out for you, and to make sure that our clients are actually being proactive with their health and living a healthier and happier life. And how we do it is like that. If we can understand what your current position is, and then we can define what an optimal position for you looks like, we can put the two against each other, reverse engineer them to understand then what your gaps are. And once we understand what those gaps are, we can come up with some strategic choices on how you can fill them. When we think about filling those gaps, we've got the option of transferring risk to an insurance company. But a lot of the time, people are overinsured or they transfer all of their risk. And then that's a risk within itself that we're paying too much in insurance and we can't actually achieve financial goals and objectives. So there's a delicate balance between how much we need to transfer, how much we can manage, and how much we can actually mitigate. And that's really it. So in your packs on your chairs and also through, Sondergaard, we offer a complimentary gap analysis to all of Sondergaard's clients. So if you'd like to have a look at your current insurance, or you'd like to put a risk management plan in place, or you just want a second opinion, if everything that you've got is as it should be, please feel free to give us a call. And there's a bit of a questionnaire in your pack that you can defer to. And that's just a word from our sponsors. Thanks. I'll be around at the back for questions later.